11:35 on a big show clock, being brought to you by the Iowa Agriculture Water Alliance. Clean water in Iowa starts here, and today is Wednesday. How about Water Wednesday? We're going to be talking with one of our conservationists coming up here, Iowa Soybean Association conservationist, coming up about an oxbow restoration project going on in eastern Iowa that the big show will be at next week. How about that? Yeah, oxbow restoration. You know, I was asking the conservationist coming up, how many oxbow opportunities would there be in the state of Iowa? I was thinking hundreds, and he says, no, probably more like thousands. So we're going to talk about restoration of oxbows coming up. This one was done in partnership with the Nature Conservancy, so that's ahead on the big show. Right now, again, being brought to you by the Iowa Agriculture Water Alliance. We're talking markets with Brian Hoops with Midwest Market Solutions. And, Brian, welcome back to the big show. Soybeans down 10, 12, 14 cents today. What's pushing this market lower?
Yeah, we're seeing, big losses in the beans. Bean oil was a little bit higher overnight, but has given up that strength and turned lower. That's putting a little pressure against the soybeans. Old crop corn down as well here. It's been some rumors, and these are nothing more than really internet-type Twitter rumors, but there's been some cancellations of corn purchases that will be coming forth in the next couple days. So a lot of this is starting to hit the market, but we're also seeing an improvement in the forecast. It's been so wet, so rainy across a lot of the Midwest, especially like in our area here. We have over 10, almost 11 inches this weekend in my gauge here in Springfield. And you go farther into Missouri and into southern Illinois, southern Indiana, Ohio, they're really wet, and they are still lacking significant acres that normally are planted this time of year to be planted. And so those areas expect to dry up, and that planting will resume, and that crop will get in the ground, and that is putting some pressure against us as well.
You picked up 10 inches of rain over the weekend?
10 plus, yeah. It was 9-something by Saturday morning, and we've had another inch or so since then, but it's not raining right now, thankfully.
And you're sitting in southern Missouri, correct?
Yeah, southern, down near the Ozarks in Missouri. So there's a lot of flooding in this area, as you can imagine.
Wow. Well, that stretches out, from what we understand, to the Ohio Valley right now.
Correct, yeah. You kind of just go in that stretch from here up into southern Illinois, southern Indiana, Ohio River valleys. There's a lot of corn, a lot of soybeans that, as I said, normally should be in the ground by now, are not being planted. Even Kentucky, Tennessee areas, a lot of that corn is way behind schedule for being planted. Now, there's longer growing season, so there's not really a concern about frost, but it was enough to kind of give a rally in the soybeans up into that 10, 50, 60 area. Old corn, December corn rallied up in the 450 range, low 40s, and then now we've turned back lower as these forecasts are starting to improve. 8 to 10 day, 8 to 14 day, all talking a little bit warmer temperatures, a little bit drier, which is really what a lot of the country needs right now.
Well, and we're going to follow along with that. Actually, the crop ratings came out for the state of Iowa, and the state of Iowa is looking pretty good. I mean, we should be thankful for what we have here. We're a little on the cool side. We had a little bit of rain yesterday, but I don't think it came in almost, feet like you guys have been getting it. We could use some heat up here to get things moving along, but pretty much planting has wrapped up. Let's talk cattle here for just a second. This is a market that's got a lot of volatility in it as well. Seems like we set new record highs about every week. Now, we're down cash-wise, looks like, and we're down futures-wise. Where do you think we're going to settle out cash market this week?
Yeah, that's a tough call. Early in the week, we thought we'd be higher once again because cattle and feed report very constructive, very close to expectations. But then, yesterday we had that big sell-off in the futures, and fund liquidation was pretty notable, and we ended up closing lower. We haven't really gained back much of that today. In fact, we're trading lower once again, not nearly to the extent of yesterday's losses after that rumor about screwworm being found in the state of Missouri that USDA did not confirm. But it's rumors like that that kind of put some pressure against the markets from time to time and kind of take that edge off. So likely we're going to see the cash markets continue to be strong. It's the futures markets that I think everyone is concerned about, and rightfully so, because we have, a very high price level right now for this cattle market. We're still having discounts to the cash with the futures, so I don't think we're going to see much in the way of any type of weakness that will be long lasting. If we see some weakness, some pullbacks, it's probably going to be short lived because of that discount to the cash markets.
Yeah, I think you're right. We're just in a situation where a little bit of news is going to tip the market. I think with cattle in particular, we're here. How can we say it? We're at very lofty levels. The air is thin where the cattle market is sitting right now. Hey, I want to just touch back on that soybean market. You said you had heard rumors of cancellations. That usually translates into China. Am I wrong there?
Usually that's the case. Now, this was actually corn cancellations, not soybean cancellations that we heard. So I doubt it's probably unlikely that it'll end up being China, and unlikely that it'll end up being Mexico. And again, these are just rumors that we're hearing with no substantiation behind it whatsoever. And it's something off of Twitter. So you know how we're in that world today where someone puts something on Twitter like that screwworm hit the market yesterday. And unconfirmed, just rumors out there, push the market sharply lower. And I think that's what's happening to the corn today. Rumors of cancellations is out there, and that's what's really driving that July contract down. Could be true, could be unsubstantiated, but that's how we're trading today anyway.
Well, yeah, and you're in this business. You know this by now, that the wilder the rumor, the more impact it has on the market.
Exactly.
So we want to keep up with the rumors just as much as we do with the facts. As well. Hey, if folks want to talk markets with you, Brian, how can they do that?
Okay, yeah, you can find us at our website, MidwestMarketSolutions.com. The list of all of our offices are there. My direct number is 417-501-5132.
Brian Hoops, we're going to catch up with you in an hour and 10 minutes. Let's go until then, and maybe get some price projections moving forward.
And fun. We speak farm. This is the Big Show.
12:55 on a Big Show clock. Wrapping up the day with a look at the market. On the telephone line with us, Midwest Market Solutions. Brian, we have been watching this market, and hasn't moved, I don't think, hardly at all during the Big Show. So not a lot of volatility. We are pushing the market lower, both corn and soybeans. So what do you think about for targets for December corn, November beans over the next few weeks?
Well, I think we're going to really struggle here to give us any real traction back to the upside. It does seem like, we just were there last week in the 450, almost 460 range for December corn, and for soybeans, we rallied up into retracement levels around 1058. I think those are going to be areas that we're going to struggle with. I think we're probably likely to go test 1030 in November beans and December corn into below 440 here, probably 439, maybe 436 before we go back up to the upside once again. It seems like the funds right now in more of a liquidation type mode because the weather is starting to improve. Demand is starting to slow a little bit on a worldwide basis. We're going to have to get into a little bit further into June, a week or 2 weeks before we can go back and start talking about upside potential on these corn and soybean contracts. So, once we can find the bottom and turn back higher, you're still looking at 1050 to 1060 is longer term resistance for November soybeans. December corn having a lot of resistance in that 455 up to 465 range. And it's going to be a struggle here for at least for a couple weeks, I'm afraid.
So what are you looking at for marketing strategy?
Well, I know a lot of our clients who we've recommended to get a lot of hedges in place, a lot of cash sales forward contracted. Now, if you are in that camp where you need to look at doing something because you haven't been doing it, I think you want to look at maybe some put options as an opportunity to go ahead and make some sales on a level with a minimum price floor. Put options are recommended. Otherwise, you wait for those opportunities. Usually our highs are made in about the third week of June, sometimes a little bit later. Seasonally, that's our high period is that third week of June. So, if you haven't done anything now, let's see if we can be patient and get some sort of a rally into that time frame, and then do some aggressive marketing.
Now, as far as livestock go, cattle, although we're pushing lower today, cattle have been kind of on a tear.
They've been really strong, yeah. We have hit new all-time highs for both live and feeders, and the supplies are not increasing anytime soon. The only thing that really is a wild card here is consumer demand, if that demand would soften. But we are going into the summer and the grilling season. This is when our demand normally improves, and we see at least another surge. I know from a standpoint, producers talking with the feedlots and feedlot managers, if they want to put cattle back on feed here, there's break-evens $218 to $220 for a lot of cattle that you want to buy right now. That doesn't pencil out. You'd have to be hedging at a loss right now. So, we need higher prices to give producers an opportunity to lock in something, and I think we're probably going to get that. We're seeing a little pullback right now, but as we get into June, I think we can see that turnaround give us an opportunity to go ahead and make some more sales or make some hedges for longer-term hedging strategies.
Brian Hoops, how can folks get a hold of you? You want to talk markets?
My direct number is 417-501-5132.
Nice, Brian. We'll talk to you again. Brian Hoops, Midwest Market Solutions, come on the line as well. Midwest Market Solutions.